Welcome back. In this lesson, we will go over the bank reconciliation process. So the bank reconciliation process is when the business compares its internal books with the bank statement. So bank reconciliation processes can range from performing it once a month for perhaps maybe smaller companies to every day for larger companies. And the reason this happens is because us as a business and the bank are on different timetables, right? There's usually a time difference between our internal books and the bank statement on a month end, quarter end, or a year end basis, which causes errors and discrepancies. So the reconciliation process consists of assessing every recorded financial transaction, verifying if the checks cleared the bank, adding up the withdrawals and deposits, working your way from the beginning to the end balance, and then seeing if everything matches and checks out. So deposits in this context is when you put money into the bank account, and a withdrawal is when you take money out of the bank account. So let's go over a simple example. So in the year 2023, the bank and the book balance is $300 on November 1st. And we write two checks to somebody for November. We wrote the first check for $20 on September 25th, which is a normal business day. And we wrote the second check for $10 on September 30th, which is the weekend, right? So the first check would be deposited on the same business day. It's considered cleared because it's on a normal business day, so everything can get done faster since the bank is open for business. So the bank and the book balance would be recorded as decreasing to $280, right? Since the first check is for $20, we subtract the 20 from the 300 balance that was in the beginning of November. And that would make it 280 for both the book and the bank balance. The second check we record on September 30th for the book balance, and the bank would deposit it on October 2nd, since the bank doesn't work on weekends, right? Or they don't deposit checks on weekend. So the book balance would decrease on September 30th to 270, which we immediately record, right? It's the 280 minus the $10, and the bank balance would stay the same on September 30th. So when we get the bank statement in the mail, it says 280. So we might be thinking we have extra money, but is that really true? No, right? So this is where we would compare the bank balance to the book balance. So in the book balance, we had already recorded minus $10 from the 280. So the book balance would be the 270. And what we would do is we would write out the outstanding checks, and on September 30th, we we uh we wrote the check, right? And since that happened, we just account for that, and we minus 10 from the bank balance, which adjusts it to $270. So the adjusted bank balance is $270, and the adjusted book balance is $270. And we are cleared of any errors and discrepancies. This looks fine. So this is a simple example of the bank reconciliation when we are sending out checks, right? So let's go over another example where we may just be depositing the check in our bank account. So in the year 2023, the balance for April was $500, and you made a deposit to the bank on April 29th, which was a Saturday, for $50. So the book balance would increase to 550, right? Because we immediately record that. We do the 500 plus the 50, and the bank balance would stay the same on April 29th, since banks won't work on Saturdays. Or I guess I should say not work, but they won't deposit the check on Saturday, right? It's not a normal business day. So the bank balance would increase to 550 on May 1st, which is a Monday, which is a normal business day for the bank. So this is to reflect the bank reconciliation process, right? So for the book balance, we know that it was $550. And for the bank balance, what we do is we just account for it. So we had $500 coming into the bank statement. And for the April 29th, we just add in the $50. And then the adjusted bank balance is $550. And the adjusted book balance is $550. So therefore, there are no errors and or discrepancies. And this looks valid. So I hope you learned a little bit more about bank reconciliation. This is obviously the most overlooked but very important process when it comes to bookkeeping. And in the next lesson, we will be going over accrued liabilities. So thank you for watching, and I will see you in the next lesson.